My next guest and my next speaker, who is the CEO of a company called Ripple. Brad Garlinghouse, may I have you here, please? Have a seat, please. Dilip. The Internet of Value. That is the message that we keep telling. Tell us a little about it, what the problem is, and what you're trying to do.
Well, so I thought Dilip's, first of all, thank you for having me. I thought Dilip's presentation was great, in part because it highlights so clearly what the problem is. You know, just within remittances, he talked about 7.2% costs across, on average. And the goal was that I think by 2030, the goal was to be at 300 basis points. I will tell you, I will feel like Ripple has failed terribly if we only achieved that goal. 300 basis points, when I think about an internet of value, it really is allowing value to move the way information moves today. We don't think about sending an email or loading a web page. I can access any piece of information from anywhere in the world at any time for virtually no cost. If we only reach 300 basis points in 2030, that will feel like a failure of massive opportunity for progress. You know, I make the joke, and you've heard me say this, that if you and I decide we want to get 10,000 US dollars into San Francisco today, the fastest way for us to do it is to go buy a plane ticket and fly it there. You know, I think everyone in here would agree that we're going to see more and more examples of connected devices in an Internet of Things, and some of those devices are going to be economic actors. Today, the only efficient way for me to transmit, between those economic actors, between those devices, if I wanted to pass a nickel between devices, the only way to do it is to hand it. Yeah. There's no efficient way to do that.
Well, we don't have a framework for micropayments.
We definitely don't. And again, I'll go back to Dilip's presentation. The data, it's profound. If by 2030 we still are at 300 basis points, that is a failure.
I mean, the one thing is that everyone in this room we can exchange an email with, but we cannot exchange money with. We have to make sure that their system talks to ours and vice versa.
And so back to what Dilip described, how did we solve that as an industry? It's called SMTP. There's a standard that allows interoperability, a protocol that allows interoperability. For Ripple, we have championed a technology called the interledger protocol. And this is what we build our technologies on top of and allows real-time interoperability between ledgers. This idea that there's going to be one ledger to rule them all. No. As you and I have discussed previously, Ripple has taken some contrarian bets early, and one of them was, look, we don't think there's going to be one ledger to rule them all. You need to think about interoperability between ledgers and connecting the ledgers so that we can let value move the way information moves today.
So let's talk about the problem that Ripple is trying to solve. Maybe you want to start with how money moves between banks right now and let people know a little bit about that.
Well, given that we're at Money 2020, I'm guessing many people in the audience know this well, but the nature of blockchain technology is to allow two parties to transact without trust by eliminating that central counterparty. Correspondent banking is a series of central counterparties. If we can leverage blockchain technologies to change correspondent banking, where you're hopping between bank to currency, where each bank is adding time, is adding some cost, if we can fundamentally democratize how correspondent banking works today, we can not only change the goal of talking about 300 basis points that Dilip was talking about, we talk about 30 basis points. That, to me, is what we should aspire to. In 2030, that's 12 years from now.
And we have a lot of money parked in correspondent banking, right? Just to do that. Just to be able to do trades on maybe Monday to Friday.
Yeah, I mean, you do have the problem today of banks being closed on the weekend. There's all kinds of stories that I'm sure many of us have heard of. A transaction that gets stuck. But I think particularly younger generations are used to the expectation that they have access to information, they have access to their funds 24/7. Why should my ability to transact stop
be limited
Friday at 3 p.m. because there's a wire cutoff?
And the amount that also the problem that you're trying to solve is to reduce the amount of money that is parked in the Nostro and Vostro accounts, is that not?
Yeah, it's a really important point. And I think when I think about the market opportunity, it isn't just about selling technology and solutions to banks. It's about leveraging a digital asset, and XRP is uniquely efficient. It's 1,000 times faster than Bitcoin, 1,000 times less expensive than Bitcoin. So using XRP to fund liquidity positions in real time. So as Faisal's describing, today, banks, corporates, pre-fund accounts around the world such that they have good funds, liquid funds available to make payments. There's trillions of dollars pre-funded.
Like 30 trillion, 20 trillion. No one knows, right?
No one knows exactly. Well, I've seen numbers as high as 30 trillion. I've seen numbers in the 10 trillion. It's a really big number. I don't think we're going to have to argue about how the
it does nothing when it's parked and not doing a transaction.
Well, it's actually even worse. And again, this isn't something the mass audience is interested in, but at Money 2020, the nature of how capital ratios and stress tests, it used to be that your Nostra accounts counted positively towards your capital ratio.
Not
post
anymore.
Basel III, post 2009, 2010, people realize, that money I have parked at the Bank of Faisal, I don't trust that guy. Yeah. That's a high risk capital. And so that doesn't count towards your capital ratio post Basel III. So now the incentive for banks to park capital, to park liquidity, goes down and down. And an amazing stat that I thought Dilip touched on a little bit loosely is, although global remittances and global payments continue to grow, the number of correspondent banking relationships has contracted by 50% in the last 15 years.
Yeah, CBR is getting reduced quite significantly.
Demand is increasing, the supply is decreasing. We have a problem.
Yeah,
we also have an opportunity.
Yeah, and there was something very interesting I learned from one of your speeches earlier, or talks, that Swift has an error problem. You want to talk about that?
It's a really good point. And I sometimes struggle with how to describe this because I grew up in Silicon Valley. To be fair, I moved there 20 years ago, but in my professional life, I grew up in Silicon Valley. And in Silicon Valley, if you're in the tech industry, you talk about 3 nines of reliability, 99.9% reliability, or 4 nines of
Six Sigma and all that.
Yeah, so think about this. When you use Google, the search box on Google, it always works. I mean, the success rate is 99.999, I think it's 6 nines. Imagine if 6 out of every 100 searches you typed into Google didn't work. It just failed.
6%.
6%.
6%.
Swift's published error rate is 6%. Now, I will talk to corporate treasury people and they'll tell you it's actually higher than 6%. But even if it's at 6%.
So what happens if it's 6%? I mean,
well, it means that human intervention is required because, hey, somebody misspelled Faisal, you fat-fingered that account number, Faisal's account number doesn't match Faisal's name. And it's a reason why there are thousands and thousands of people embedded in error correcting and chasing down those payments that kind of get lost in the system.
Imagine if that happened with email, 6%.
Yeah.
I mean, imagine.
That's if 6% of your emails didn't go through without human intervention, that would, the information society we live in today would not work.
And you don't come from a banking background, so you also don't come from a cryptography background or a computer science background. And yet here you are, CEO of a company that is using cryptography mathematics to solve an old age problem of remitting money real time.
Well, I'll say a couple things. One is I've always been a bit of a geek and did some coding earlier in my life, but never formal training around computer science beyond basic stuff way back when. But to me, the reason why Ripple has been successful is because we've focused on a clear problem for a clear customer. There are a lot of companies at Money 2020 that are thinking about blockchain technologies. The best counsel I can offer is understand what customer you're serving, understand what problem you're solving. There's a lot of people out there that I think it's a technology in search of a problem instead of a problem in search of a technology. Even when I got to Ripple about 3 years ago, we were looking at a bunch of different use cases for blockchain. We were thinking about identity, we were thinking about smart contracts. We decided to focus on one. And that focus has meant we have hundreds of people focused on solving that problem for our customers. And we now have well over 100 banks and financial institutions around the world that are working with us. We just announced our product that uses XRP to deliver that liquidity. We productized that in Q3 last year. We announced our first customers. Today, we have some of the largest payment providers in the world using XRP for their payment flows into Mexico. At the end of the day, if you're solving a problem, meaning we're reducing the cost and increasing the speed, I'm very optimistic about the continued adoption of XRP as solving that problem because it works.
So let's start with the 100 banks. Do the banks use XRP to transfer?
No, the vast majority of the banks we have announced are working with our product called xCurrent. And xCurrent is a messaging solution that allows two banks that already have a bilateral relationship, already have that nostra-vostra relationship you were describing earlier, to more efficiently debit and credit those accounts.
24/7.
24/7, no problem. Where xRapid, which is our XRP solution to source liquidity, comes in, is if the Bank of Faisal and the Bank of Brad already have a relationship, I can use xCurrent to manage that process. If we now want to settle to the Bank of Audience, I don't know what currency the Bank of Audience is. We're going to stick
Singapore dollars.
Singapore dollars. We don't have a Nostra account in Singapore dollars, but I need liquidity. Well, even yesterday, I think there's a new regulated digital exchange announced here in Singapore. So if you hold US dollars, you can sell your US dollars, buy XRP, move XRP, which would take about 3 seconds, sell the XRP, and buy Singapore dollars. That whole transaction can be completed in less than 10 seconds.
You snuffed out volatility.
The volatility, it's fascinating. There's a lot of misinformation out there about digital assets broadly, and certainly around Ripple. Volatility is not really, that's fake news. Volatility, you're talking about 3 seconds of volatility risk. So here's a crazy thought exercise. If the average SWIFT transaction is about 2 days, that's 48 hours, that's just shy of 180,000 seconds. Take my word for it, that's the math. You can either do 3 seconds of an asset that is highly volatile, or you can do 180,000 seconds of an asset that is low volatility. It turns out there's more volatility risk using SWIFT and fiat than there is using XRP.
Martin, can we have the poll question? I want to take a very quick poll, and we'll give the result towards the end. How many people think that payments, cryptocurrency-based payments, will become the norm in 2018? Yes, no, and a maybe. You can use your Slido to do that, and we'll come back to that. But coming back to the 100 banks. Are the 100 banks, if another bank joins the network and it's 101, are they all able to communicate with each other using your xCurrent platform currently?
Yeah, we call that RippleNet. And so we have banks that have agreed upon a rule set using the same software such they can efficiently participate. And we now are signing up more than a bank a week, or a financial institution a week. So that the network effects are very strong here. The more nodes on a network, the value of that network increases by the square of the nodes. So every time we add another node to the network, the value of participating goes up, and so the value to the next bank to sign up, the next payment provider, next financial institution to sign up goes up. So the momentum is definitely building. I'll be interested to see what the survey says. Although, to me, the survey, it isn't about whether you as an individual are using a digital asset to make a payment. It's about how digital assets can be used in the infrastructure to dramatically accelerate what is the primary payment mechanism we use today through financial institutions.
And you're not a bank per se. You want to market, or you do market yourself as a payment network or a processor?
It's a good question. I just got this question a couple days ago. Somebody said to me, "Are you a crypto company or a blockchain company?" And I said, "No, we're a payments company."
Yeah, payments.
We happen to use cryptography. We happen to use blockchain technologies. We happen to use a digital asset to solve a payments problem.
In a decentralized manner.
In a decentralized manner. The XRP ledger is a decentralized open source technology.
Ripple vanishes tomorrow.
If Ripple, the company, goes away, the XRP ledger will continue to persist.
Including RippleNet?
I hope Ripple doesn't go away, just for the record, but yeah.
Why? So explain that part of decentralization. How does that work? And my second question to you is, because you're issuing a token, doesn't that make you a money transmitter now in the eyes of most regulators? And if that, how would you go about that?
So I'll take that second part. When we come back to the first part, if I forget the first part, please ask me again. I want to talk about regulation because there's so much uncertainty that people perceived uncertainty, really. What we all experienced in the digital asset market was a lot of, in January, the markets, rumors out of India, rumors out of South Korea, things sold off. And I tweeted out recently.
You had a good year, 20,000%. 20,000% increase.
I tweeted out recently, I'm ignoring that for the moment, because I tweeted regulatory uncertainty it's a euphemism in my opinion. It's a euphemism for I don't agree with the regulation. The regulatory certainty, I mean, look, there is clear regulatory frameworks for doing payments. And yes, you have to have KYC information. You have to do AML checks. You have to do BSA checks. We can list the 3-letter acronyms and 4-letter acronyms that come after that. This idea that there's regulatory uncertainty to me is trying to pretend that crypto somehow shouldn't adhere to the regulations that already exist. That's just not the real world. I mean, one of the reasons why Ripple was controversial and contrarian early on is because we said that the revolution of blockchain isn't going to happen from outside the system. It's going to happen from within the system. Many in the blockchain community have espoused, many in the Bitcoin community have espoused this idea that, down with government, down with banks. Look, Ripple's taking the position that governments aren't going away. I don't think they're going to go away anytime soon. And so if you want to dramatically change the nature of how payments flow, if you want to solve Dilip's problem that he's talking about earlier, you want to work with the system. You want to work with the regulators. And when regulators understand that using Ripple's technology and using XRP through the flow that I described, you're going from one regulated institution to another regulated institution. There's a KYC account, a KYC verified account on both ends. There's AML checks on both ends. There's no regulatory uncertainty.
And coming to the earlier question.
What was it?
Oh.
It was a really good question.
I know.
But we forgot.
We forgot. Okay. Quick question. Within the crypto community, Ripple is considered to go against everything that crypto stands for. Why do you think this belief exists?
Well, I think it's what we were just talking about. To use the crypto parlance, we're working with the man. The crypto community wants to kill the man. Look, I just take the point of view that the most effective way to have an impact, to dramatically change how the world works, is not to pretend that governments are going to go away. We can have, and the progress we have made, in my opinion, in the last 3 years is astounding.
Yeah, no doubt.
It's incredible to me, and it's because we're not trying to blow up the system. We're working with the system.
And talking about working with the system, you will not be, and I think you're cognizant that you will not be the only network out there, and there are other networks, who are doing fantastic jobs and will.
Absolutely.
How will you all work together?
Well, that goes back to the interoperability discussion we were having earlier. I think some would like to believe in a world where everyone adopts one ledger, and every transaction is happening through that one open ledger. I don't think that's going to exist. And I think that we are...
We'll have a multitude of,
different kinds of ledgers, securities ledgers.
That's where your ILP comes in.
That's exactly right. And that's how I think we truly deliver an internet of value.
We have a minute. Maybe you want to explain what ILP is.
So ILP stands for interledger protocol. In the same way I think the Internet of Information was built on technologies like TCP/IP and HTTP, we believe the Internet of Value will be built upon ILP, the interledger protocol. And this is
an open source?
An open source technology that we have embedded and partnered with a bunch of companies around the world. It'll continue to evolve and develop. Certainly we have been a protagonist, and some of the inventors of ILP work at Ripple.
Networks can connect.
That's exactly right.
Seamlessly.
That's exactly right.
They could be any Bitcoin to XRP to JPY to...
And the multi-hop across, you want to go from a JP Morgan ledger through Bitcoin, through ACH, and pay out on Linlen Pay? Okay, no problem.
And are we seeing these rollouts happen?
We actually did a demonstration of a test where you went through 7 different ledgers through ILP at the same time.
And one quick last point. You're not just working with banks. You're working with payment providers, NBFIs as well, wallet providers, telcos, and MNOs that can actually exchange value, correct?
I mean, to me, that's part of the example of it's not going to be one ledger to rule them all. When I often probably make the mistake, I say banks, and then I'll correct myself and say financial institutions. And look, to me, anyone who is helping a consumer or business host value and move value, we want to work with them. We want to enable Exxon, who might be banking with Santander, to enable payouts to their drivers in Nigeria using M-Pesa. Today, Exxon wants to do that, and that's a really hard problem for them. Through technologies that we're talking about here, to real-time interoperability such that Santander can execute a payment and have it settle into M-Pesa in seconds, that's a big change from where we are today. And again, I'll go back to Dilip's presentation earlier. if we're successful, by 2030, we're not going to be talking about 300 basis points. We're going to be talking about 30 basis points.
Which will do magic for the global economy.
Without question.
Can we have the results for the poll of what people actually put up? Let's see. So 49% said no.
Well, so to me, I agree. I would have said no, because what I'm saying here, the audience will be making cryptocurrency-based payments this year. I mean, look, let's just by show of hands. How many people here have used a Bitcoin, an XRP, or Ethereum, or anything to buy something personally? And a second time, how many of you done it more than once? So some people, they've done it once, it's a novelty, that's kind of cool. But look, I mean, you may notice, I don't even use the word cryptocurrency. It's not a currency today. I can't go to Amazon, I can't go to Starbucks, I can't use, these aren't currencies, they're digital assets today. Maybe one day they will be cryptocurrencies, but today I talk about them as digital assets. That doesn't mean they can't be used to solve a real problem at scale. But I agree. I don't think most people in the audience will be using cryptocurrency this year for payments. I think they might be using it through a financial institution. It might be totally invisible to them, right? I mean, I know we're running out of time, but there's lots of examples today where we have corporates in Sweden settling into the US dollar in seconds. The corporate doesn't know that it's going through blockchain technologies.
True.
It's just solving a problem.
Brad, thank you very much for taking the time out. I know you've been flying for quite a few days, and you probably don't even know which city you're in. But thank you very much.
Thank you for having me. Thank you.
Thank you.